Somebody is hunting your stop loss. That's not paranoia. It happens. But it's not who you think, and it's definitely not personal. By the end of this video, you'll know exactly what's actually reading your chart, and why it's not what every course is selling you. Every trader's felt this. Clean trade. Good setup. Price gets within a few ticks of your stop, hits it, and reverses immediately. Without you. You think bad luck, or worse. You think they're watching me. Let's kill that myth properly, one layer at a time. Here's the version most traders believe. Somewhere, a bank sees your account, sees your stop, sitting at some exact price, and pushes the market there on purpose just to take your money. Here's the actual mechanic. No institution can see your individual stop-loss order. And even if they could, your stop is a rounding error. A single retail stop is worth nothing to a fund that needs to move millions of dollars without blowing up the price. Nobody's watching you specifically. Nobody cares that specifically. So if nobody's watching you personally, why does price keep hitting the exact same spots? Because your stop isn't unique. Decades of retail behavior put stops in the same handful of places, over and over. A few ticks below the last swing low, a few ticks above the last swing high, just past a round number. You didn't come up with your stop placement. You learned it from the same charts, the same rules, the same logical spot everyone else learned it from. Which means your stop isn't a secret, it's a cluster, sitting right next to 1,000 other stops that look exactly like it. And once a cluster like that exists, it's not complicated to use. Price pushes slightly past the level, triggers the stops, and reverses. That's the same exact mechanic as a false breakout. Traders chasing the break get trapped at the same time the stop-loss crowd gets triggered, all in one move. Think of it like a whale feeding. A whale doesn't chase one fish at a time. It drives an entire school into a corner and takes one big gulp. The gulp in the market is that single spike through a level, sweeping an entire cluster of stops in one shot, instead of hunting anyone individually. So it was never a conspiracy against you personally. It's a crowd of traders, all trained to think the same way, all placing stops in the same handful of spots, and something reading that crowd like a map. Here's the part that should actually change how you see this. Nobody needs insider access to find these clusters. They're not hidden, they're sitting in plain sight on the same chart you're already looking at, a few ticks beyond every obvious swing high, every obvious swing low, every round number everyone rounds their stop to. Any execution algorithm can infer exactly where those clusters sit, just from price structure, the same way you could if you knew to look. This isn't a secret institutional weapon, it's statistics. The market isn't reading your mind. It's reading a crowd that's more predictable than it thinks it is, and you're currently standing exactly where that crowd always stands. And of course, there's a course for that. Learn the secret institutional stop hunting method the banks don't want you to know. For a price, what you're actually paying for is the same 5 minutes of looking at your own chart and asking, where would literally everyone else's stop be right now? That's the whole secret. Nobody's hunting you, they're hunting the crowd. And right now, you're standing exactly where the crowd always stands. So here's the actual question. Where do you usually place your stops? A few ticks below the swing low, right under the round number? Tell me in the comments. I'm willing to bet I can guess it before you say it.